Yeah, you would think. Let me ask you about the Federal Reserve. Growing speculation that rising inflation could force the Fed to increase rates 4 or 5 times now. I mean, 5 times is pretty aggressive out there. What's your expectation?
I think 5 times sounds unlikely.
I
3 is clear. 4, perhaps. But I think the Fed is watching inflation rise, but I don't think anybody expects inflation to suddenly snap out way beyond 2%. So I think Chairman Powell and his colleagues are in a gradual adjustment mode, and that seems like a good place to be.
Is there inflation, though? I mean, that's one of the biggest questions we're having on the street is that, you know, the PCE has consistently come around 1.5. You know, we'll get an outlier here and there. Otherwise, CPI is not really trudging above 2. And so I don't know where there is inflation. I haven't seen it come anywhere.
Well, I think we will cross 2% in core PCE later this year, but I agree with you that I don't see inflation breaking out. So I'm not one of these people worried about a sudden snap in Fed policy or indeed in long-term rates, which would be the sum of inflation and a real rate.
Glenn, your thoughts on this deal with South Korea? It eases the steel tariffs in exchange for quotas on steel exports from South Korea. There's a provision as well to make sure neither country intentionally devalues the currency for a trade advantage. What do you make of this new deal with South Korea this morning?
I don't think it's a bad deal. I think that there was a lot of uncertainty going into it because people didn't know what the administration was trying to accomplish. But I think it did make some marginal improvements for the United States. I don't think we were even selling cars at quite our quota before, so I'm not sure what the expected gain will be, but I think it's not a bad thing. What I would urge the administration to do is be clear about what the goals are when you go in for trade so that you don't create so much uncertainty.
Mm-hmm. Yeah, I don't agree with that. I don't agree with that at all. I mean, we're moving back towards managed trade. We did this with Japan in the 1980s. I mean, what we did was extend protections for U.S. truck makers instead of forcing South Korea to lower their tariffs. There's no help here for our agricultural market. I mean, Glenn, this isn't expanding market opportunities. This is managed trade. How is this a good deal?
Well, I think it is a good deal for the sectors involved. I don't think it's the best deal that could be done. I share your views that we should move toward more openness. But given where this administration started, I'm actually pleasantly surprised.
So this is good from a low bar. That's what you're really saying.
Yeah,
well, I didn't quite say it that way.
Okay.
No, if you're worried about protectionist policies from this White House, like a little bit of give is a lot.
You know what, Glenn, I'm wondering if this has anything to do with South Korea and everything to do with the NAFTA negotiations that are going on, that we basically strong-arm South Korea into protection for certain industries so that they could pronounce a win and then go to the NAFTA partners and say, hey, look, if you don't do what we want, we're going to do what we did to South Korea. We're going to do it to you.
That's possible. The Korea issue, of course, is complicated because it's not just the trade negotiation. It's the obvious elephant in the room of North Korea and those upcoming negotiations. Right. So it's really hard to know how they're connected.
Well, you know, I mean, at some point, and it's like any day now, NAFTA's off the table. I mean, let's face it, they have elections in Mexico, and then we have the midterm elections here. So by the time you're actually going to get back to the negotiating table on NAFTA is well after November. So I don't know that we'll hear any headlines in terms of NAFTA. There's that uncertainty out there. Let me ask you about the Atlanta Fed, Glenn, because the president of the Fed in Atlanta told the Journal that tax cuts and increased government spending, like the recently passed $1.3 trillion spending bill, could put pressure on monetary policy. What's your take on that $1.3 trillion spending bill and its impact?
Well, I think the spending bill was unwise. It really is a continuation of Congress's unwillingness to grasp the fiscal situation we're in. Whether it radically changes monetary policy, though, I would be a little bit more questioning. I think the Fed will continue to gradually increase rates. The only reason that would change monetary policy is if suddenly inflation snapped or growth snapped out of a range. I don't really see that.
All right, we'll leave it there. Glenn, great to have you on the program. Thanks so much.
My pleasure.
Glenn Hubbard joining us there.